The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, now that the USDA report has come and gone for the month of September, we got the table reset, so to speak, here as we got the new numbers. Not a whole lot on the bullish side of the equation to write home about. A few things of note, but we have plenty to dissect and digest here on today's program. Joining us now with market analysis here on Market Talk, Jacob Burks with agmarket.net. Jacob, good to catch up with you, buddy, and a busy day, I know, for a lot of us folks who watch the market trade. Now that the dust is settling a little bit, we can kind of take stock of what happened. And as I mentioned, there wasn't a whole lot that was bullish in this report, Jacob.
I know the USDA, set forth, earlier this year, regarding, planted acres numbers, much higher than what we had expected going into the March report. You come into June, we're a little bit higher, and now here we go into the September report, and they did move the acreage. FSA numbers came in. Typically, we see that increase come in the October report, but they scooted it up. We end up increasing nearly 700,000 acres, nearly 800,000 acres in the corn market. So that was a non-bullish surprise, definitely here for the corn market. So. The bean market was the same story, but just a lot less numbers here, like less than 100,000.
Well, and thinking about this too, we know we have a tighter balance sheet on the soybean side, and you look at the ending stocks numbers now after the report. Corn 2.221 billion, soybeans 220 million, wheat 615 million. I know we'll talk wheat in a second, but you look at beans and corn. I mean, those numbers, corn still definitely, we got plenty of corn. Beans, a little bit tighter. I mean, I think it's going to be interesting to see once these combines roll. That seems like the next thing in front of us here, Jacob, is that we're just going to have to get hard final yields to have an idea of what we got.
And I as soon as I saw the report, the immediate reaction was to the downside, and it wouldn't have surprised me if we had rallied all the way back here, because the thing that you look at is no one wants to believe the what's planted. And the thing that we've talked a lot about here on the whole agriculture sector is the fact that these late August weather, this weather into September, has not been beneficial for the finishing of the crop. And that is a very, very hard thing to judge. It's hard to walk out in the fields and look at this and measure test weight. It's hard to look out there and see what kind of damage. So whether you're talking about on the ground surveys, or whether you're talking about how they call people, or vegetation growth, whatever, there's going to be things that's hard to measure of how this corn crop, how this bean crop finished, what's actually in those bean pods. So I think that's the talk. That's what we've been talking about before the report, but now it's going to be amped up a little bit more after we didn't get that bullish push here. So that's going to be, the focus is what are we seeing in the combines. And I'll be, just from what we've talked with our customers as we go through the southern part of Illinois, some of the Tennessee, Kentucky, some of the southern Missouri, Arkansas, and the Delta, we haven't heard a lot of negative yield numbers. It's been pretty healthy. So we've had some really positive, numbers come out of the productions that we've talked to so far in these non-scientific surveys, if you will.
Well, and USDA is expecting record high yields for corn in Ohio and South Carolina. And then on the soybean side, Arkansas, Indiana, Kentucky, Mississippi, New York, Ohio, Tennessee. So some of those southern states, Delta states you mentioned, looking for a record soybean yield. When I look at everything and then I look at the futures on Tuesday, I feel like it could have been worse, with the drop. Just the path of least resistance was to the downside. But if we ballpark at 475 D's corn and 1350 Nov beans, I mean, it's still an okay level. I mean, we're really not far off where we've been here for the last, month or two, Jake?
Yeah, unfortunately, it's been a very, very steady, very slow, very stagnant marketplace. There just hasn't been a lot of major news coming into the marketplace. You haven't seen major changes in demand. You haven't seen major numbers change like this, on the USDA side. So there's been very stagnant. You look at where we're at. It's hard to maintain a bean price over $14. It just doesn't happen very much. You look at what time frame we're in. Was it 17 and 18? I believe we that's in the August 31st was the lowest tick of that contract. So when you go into the end of August and into the first part of September, it's really hard to get a rally. It's just that's when you're seeing a lot of pressure on this market coming from the old crop, and you're starting to get into the harvest time frame. And so I guess to see that the market's being pretty stagnant, hopefully on the lower end of where we're going to see, and maybe we can get some type of bullish news, as we go forward with combines, and that we can catch that rally. But this time of year, just hard to sustain a huge upward movement, and to be able to go sideways a little bit. Maybe that's not the worst thing, like you said.
Yeah, a bit of that seasonal time frame harvest pressure here. It feels like it's going to kind of overtake these corn and bean markets for the next couple of weeks. And USDA did cut crush 10 million. They cut soybean exports, I think 35 million. Didn't make any changes to corn demand though on this report. So I mean, we look at the demand aspect for corn and beans. That's a tough situation still, and it doesn't feel like it's going to get any better anytime soon, Jacob.
No, and I found it, rather ironic that you talk a lot about how we probably assume that there's going to be some cuts in the corn demands balance sheet, but yet we did cut in the soybean demand. And so I thought that was something, crush, the expansion that we've seen in the crush domestically was rather surprised. I mean, and I think it's probably justified. The cutting in the exports and the soybeans, probably justified. But then to look over on the other side of the balance sheet and know that we're already behind in sales for next year in the corn market, 15%, and we're also increasing what we're expecting to export in general for next year. I just found it rather odd, I don't know. I don't want to call it irresponsible on the USDA side, because I don't want their job, so I don't like to scold and like try to nitpick exactly what they've done. But you look at next October, or in October's report, are we going to see them go in there and cut some of that yield back again, but yet cut the demand out as well? So that's kind of it's almost like they left a little bit of powder in the gun here for the next report.
Well, and I know we'll get quarterly grain stocks end of the month, and then we'll get to the October report and more. So a few different USDA reports ahead of us here in just a matter of weeks. Jacob, overall, you look at corn and beans and your marketing thoughts here. Anything really change in your mind as now we got the WASDE numbers out? To me, it doesn't seem like much would probably change with a farmer's mindset here as they're looking to protect some risk.
The one thing that the big talk going into the harvest is, what are you going to store? What are you going to see? And typically you're seeing, people will rush to sell beans earlier and store corn, and that's what the market's telling us to do too. There's carry in the market at this point here, so I don't know that it changes a whole lot of mindsets. I think the mindsets just gets a little bit angry, like, hey, you're looking out there at your field and the USDA only decreases the yield this much. But inevitably you're looking out there and thinking, hey, I don't think I have that the crop that they're saying, and it doesn't help our prices out. I think that there will be, as these markets have pulled back a little bit, I think you'll see less and less farmers selling at these levels. Now the fear I have is, if we do get a 10-cent rally in the corn, if we do get back up to unchanged on the, or up to 20 cents higher in the beans, that's going to get hammered. You're going to see some farmers come in here and say, hey, every little rally that we see, we're gonna find some way to sell it. But what I would look at and encourage guys to do is look at what's out there. Look at what the market's telling you to do. Look at what it's telling you to store right now. There's opportunities out there to use your grain bins in a manner that's not a wishing well, but that's making it a price, the ability to take advantage of the price and pay for that storage, pay for that interest cost that you're going to have on that corn and beans.
On the wheat side, we did get a little bit of bullishness there. It felt like some decent rallying in all three complexes on the day on Tuesday after the report. Spring wheat harvest, I know, is pretty much wrapping up. Any thoughts? What's your reaction to the wheat side of the ledger after the WASDE on Tuesday?
Well, it's not every day. Every report, it seems like forever you just never got anything bullish in the wheat. To finally have wheat be the bull, I mean, I think that was probably something that was very welcome. And they cut most of that through. Most of it was out of Australia's production on a global scale. I think they cut Australia 3 million metric ton. They cut Canada. They cut the EU. They cut a little bit of everything. Actually, increased Ukraine a little bit, which I find that rather interesting when you don't really know what's going on from a production side. You can measure that, but actually, what's going to hit the market, I think that's still up in arms there. So Russia still feels like they're dumping wheat on the market as cheap as possible, and so I think that's still a problem. But to find a lower production number globally help stimulate this wheat market, and something that we needed to see that bounce out of there. If you look at the charts, we're putting together a key reversal on the chart in Kansas City. So a little bit of positive news out of the wheat market. Hopefully that's what can keep a floor under this.
Spring wheat, I'm hearing some yields better than expected. I know we had some pretty ugly spring wheat and some stuff headed out, but I'm hearing some decent yields. Are you hearing some of that talk as farmers are getting some of that spring wheat harvest done?
Visited with some of our we have a branch office up there in downtown Almont, North Dakota, and then visit with him. Everybody he was talking to was just rather pleasantly surprised. Some guys up to 30 bushels better than what they were expecting. 30 to 40 bushels better than last year. So I think that spring wheat, that harvest, it's hard to measure from the road. It's hard to measure even walking out in the fields and stuff. And I think them having a decent moisture really benefited them this year early. That early moisture helped.
We're talking with Jacob Burks from agmarket.net here on today's program. Jacob, let's talk livestock here a little bit as well. I don't want to ignore cattle and hogs. Hogs especially, I think, maybe like some of the cheaper feed prices on the day Tuesday after that report. A pretty solid day overall in hogs. What's your take there?
Well, you don't want to ignore the hogs, especially on a day like this when we got $2.50 higher. But you look at, you kind of got to look at the products. I mean, we haven't seen the consistency in the products, and that's kind of what's kept hog market going up and down. It's been hard to really form a bullish story whenever you see the different products going up and down, and it stayed steady. It's done what the products have kind of told it. Cash markets stayed steady here. We've seen a little bit of pop up here. Maybe we pulled some of those hogs forward here before the Labor Day weekend. Now you're starting to be a little bit more, short bought here on the packer side of things. Whatever the case is, all that stuff's kind of added together here a little bit to get us a little pop here after the Labor Day weekend. Being up here at the $85 level. I mean, this is something that we've found a pretty good floor. We put a pretty good floor in, and we just need some positive news to build off of that. And I think if you can see, I don't know if it's really going to have to be in the dollar index, but we just need to see some of that, the ability, the opportunity for someone to come in here and purchase some of this protein, some of this cheaper protein in the hogs to get them really rallying. And I think it's going to be generated probably on the export side of things.
I was going to say the export side because I feel like, the domestic demand, the BLT season is kind of over. And I know this ties into both pork and beef. I mean, reassessing that, retail demand over Labor Day, et cetera. We're kind of out of the barbecue season at this point. So I think you're right. I think we're going to have to look at some of that export demand on the pork side, Jacob.
Yeah, I mean, you want to see them start building the inventory. Build that cold storage. Building for the holiday season, building for that exports, and that's what we need to see. I don't know. You don't know really how that ends up until we start seeing what happens in our economy. That's you always got to look at. Every time you hear a guy talk about the livestock market and the protein market, it always boils right back down to what's going on in the economy. How are we going to see this? You start to see more jobless claims. You start to see lower wages. Then you got that fear that, hey, the beef side of things are probably going to take the hit first. It's been extremely resilient this year to see us stay over $300 box beef and basically all summer, all year, and hasn't really slowed down yet either. So the cash market and cattle have went down below the 180 level last week in the South, and now we're still back up in here at the 182, 184 area. This has been an extremely resilient market to just stay pretty steady. And sometimes you just need to build that platform, build that steadiness, so that way when you do get that bullish news, that we can really bounce off that.
On the cattle side too, you mentioned beef there a little bit. Folks, we talked about this before. Folks are still going out and buying steaks. I mean, even at some higher price cuts. But in the same turn, I'm starting to hear a few folks anyway saying, "Oh man, beef chuck roast for X dollars. I'm going to pass on that chuck roast." So, sure. I mean, I'm hearing a little bit of that. But at the end of the day, still, if folks want a steak, they're going to buy a steak, Jacob.
Hey man, it's funny even you look at the exports. Our exports are down a little bit this year. We know they're going to be down because they're higher, but these countries that have developed this taste for this higher quality meat, that's great marketing from our beef industry. That once they see that, once they have that, it's hard for them to go away from it. So I would say that demand has stayed strong because of that, because it's maybe it's not as elastic as what we think it is. It's something that people are going to pay whatever it takes. I know I rarely pay attention. If I want it, we're going to go to and get a steak, right? So
Yeah.
I look at the what that's going to do, what that's carrying forward. Obviously, it's in the long term. If it stays this high and we see this type of separation, there will be more demand go into the cheaper cuts and the cheaper products. But at this point, right now, it is stayed strong. They've done a good job of keeping the weights down. They have to come in here and pay for that cash market. So it stays strong. I don't see it. I don't see anything slowing it down right now unless it comes from the major economy changes that possibly could happen. That's what we have to keep our eye on.
Well, Jacob, before we wrap it up here from the Moving Iron Summit in Nashville and let you go, any final thoughts you have for us here today as you assess the damage that's been done, so to speak, with the WASDE, et cetera? Anything else you want to mention or reiterate to folks here today?
I don't think that. I think that when you develop a marketing plan, you look at this thing, because this is what we talk about every day, Jesse, is like, how do we get paid? Like, this is what we're working with, guys. What's going to be their bottom dollar? I think that when you have a marketing plan and you go through the year and you get to this time of year, I think it's very, very, very wise to break down and look at what you're going to do and how you're going to use the tools that you have, the storage that you've built. How are you going to use this? How does logistics work into your operation? And so I would encourage everybody just to don't sit on your hands now as you're getting in the combine and give up on what this price market's doing. Like, don't be sitting around and just take what the market gives you. There's a lot of tools out there in a stagnant market that you can go out there and add value to your crop. And so I would encourage guys to just look in there, get educated on what kind of tools, what kind of strategies are out there, because this is a very when the markets are not just making a directional move, there's tools that you can use to help help your bottom line.
Well, and I know if folks have questions, they can reach out to you and the team there at agmarket.net very easily. Check out your research and talk with you guys and much more, can't they, Jacob?
Absolutely. Just go to agmarket.net and take a look at our intel. We give a 30-day free trial of that intel. We'd love to chat with you about it.
Jacob Burks, agmarket.net. Thanks for joining me on Report Day. We appreciate it. Have a good one. We'll talk to you soon.
Hey, thanks for having me, Jesse. Appreciate it.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.